Move the market today. Julia Lee joins us now from Bell Direct. Good afternoon, Julia. Thanks so much for joining us. A positive start to the week again.
Nadine, after 2 weeks of gains on the Australian share market, we're off to another good start this week with a rise of more than 1%. The leads coming in this morning were pretty good, with a positive lead from the US as well as commodities. So it wasn't surprising to see miners really lead the gains on the Australian share market. But on the flip side, we did see banks dragging on the market. In fact, the financial sector, the property sector and information technology sector, the only sectors to lose out today with losses. If we have a look at that material sector which led the gains, we did see a strong session by BHP Billiton and Rio Tinto, but it was really the gold miners which outshone every other stock. We saw gold prices reaching a record high during the Asian session, hitting 1,130 US an ounce. Now, a lot of that has to do with US dollar weakness. We did see the US dollar being sold off after those very strong third quarter GDP numbers coming through from Japan, and of course that was great news for commodity prices. We saw gold prices reaching that record high. We also saw copper prices reaching their stops in Asian trade as well. So really good session by those miners. Having a look at what other stocks moved during the session, an Incitec Pivot had a good session. It rose about 6.5%, and that's despite saying that it had a loss, with a decrease of 130% to a loss of $180 million. But if you have a look at the underlying profit, it actually came out with a decrease of 46% to $348 million, and that beat most analysts' expectations. So Incitec really having a good day on the back of that. Of course, Access still in the spotlight, up by 4% today. That's on speculation that it could be hit with another sweetened takeover offer. So that supported the share price there. But we did see Breville trading down, and that's after it rejected the offer from GUD Holdings, saying that the offer price isn't sufficient. So altogether, it was a very good start for the Australian session. We saw gains of more than 1%, and traders will now be looking to the US tonight, where we see retail sales numbers released.
Really important read coming out of the US ahead of Christmas. Just staying here at home, though, we did see Babcock & Brown shareholders vote in favour of recapitalisation. What do you think this means, Julia?
I guess there was a lot of speculation going into this annual general meeting by Babcock & Brown Infrastructure on whether RBS might come to the table with another proposal. The management of Babcock & Brown Infrastructure denying that, saying that this recapitalisation plan that's on the table is going to be pretty much the only one that can be executed. Now, the $1.7 billion recapitalisation plan has been approved by shareholders, and of course this means that Brookfield, a Canadian company, will be taking between around about a 35 to 40% stake in Babcock & Brown Infrastructure in return for some key assets, including that half stake in Dalrymple Bay. Now, this is so Babcock & Brown Infrastructure can meet its financing needs. It has some debt maturities coming up, and if we have a look at the level of debt in Babcock & Brown Infrastructure, they've got more than $9 billion worth of debt. So hopefully that will get rid of some of the short to medium term issues for Babcock & Brown Infrastructure. Its shares, of course, have been in suspension since last week, but in the year to date we've seen its shares lose around about 70% in value. But certainly some good news coming through from Babcock Infrastructure, because if this approval did not go through today, then Babcock & Brown Infrastructure could have been facing some severe problems on the financing front.
Just in other news, Julia, we saw Elders announcing a net loss, but the shares look like they've gained close to 6% today. So why was that?
Elders came out with a net loss, and it came out with a net loss in the 15 months up to September, a net loss of $466.5 million. Now, the reason why its year is a little bit funny this time around, and it's come out to 15 months, is because it's changed its accounting period from this year. So if we have a look at Elders, most of the loss was due to one-off restructuring costs. If we have a look at the commentary coming out, it was quite positive, saying that the business cycle probably has bottomed out and that our farm products consumer confidence is starting to return back. But Elders didn't pay a dividend in terms of the interim dividend, and it doesn't look like it's going to pay one in terms of the final dividend, which isn't surprising situation given that massive recapitalisation that we saw back in October, which increased the number of shares on issue by fivefold. So I guess for longer term shareholders, they're still waiting for the shares to come back. The shares are down 72% in the year to date so far. Brokers are becoming more positive on the stock, saying that they're getting rid of some of the write-downs that they need to get off the table before they move forward. So Elders having a good day today, increasing almost 6%.
All right, Julia, thanks so much for the update. We will speak with you tomorrow.
Thanks, Nadine.